I'd like to show you a way to save money on life insurance. The most common type of insurance is level term insurance, but what I'll touch on in a moment is decreasing term insurance, which can save you money. So level term insurance is very simple. Starts at point A and runs to point B, a predetermined period of time. So when your children are born, it may start, or you may create one, and the point B may be of course when they leave university and become less of a financial responsibility. A level term policy will typically have fixed costs. So if it's £100 a month here, it stays £100 a month throughout its total term. The payout, if it's say £1 million or whatever currency you want to use, £1 million here, it stays the same. So at any point that you die during that fixed term, it pays out £1 million. So it's fixed costs for a fixed payout. Nice and simple. Now the comparison to that, or an angle you might use, is to employ a policy such as a decreasing term policy. This is also a term, so it has a point A, a starting point, and a point B. The difference with these is it has a reducing payout. So if it's £1 million here, it may reduce during the course of its term. So it might be 950,000 here, 600,000 here, 500,000 here, and so on. So the amount that it pays out reduces over the period of the term of the policy. Now the difference is that you'll have significantly lower fixed costs. So the monthly outgoings, the fixed monthly outgoings, are significantly reduced when compared to a term insurance plan. So the logic of a decreasing term insurance plan, if you take a lifeline here where someone is age 35 and they're planning to age 65, well, the objective usually is that they're going to build up assets over that particular period of time. So whether that be through savings, investments, pensions, property, whatever they want to do, typically they're increasing their assets over a period of time. So life insurance, by using a decreasing term, you'll note here that the shortfall between what they have and perhaps what they should have to support their children in the eventuality of their death is quite significant, but it's more significant when they've got less money. But if they're saving and planning accordingly for their future, their need for life insurance, or the amount of life insurance, will reduce over the period of time. So that's where, if you have a decreasing term policy, which covers the big area of risk at the beginning, but reduces over the period of time, whereby you've got more money so you need less insurance, you can reduce your monthly outgoing. So let's look at the cost saving of level term versus decreasing, so you can get a true saving on your financial outgoings. Let's look at a level term policy, $500,000 over 20 years. The total spend, so that's every month spent over the 20 years, equates to $30,000 for that particular example. If you look at a decreasing term policy, $500,000 over 20 years, the total spend is $18,720. So your saving over the term of the plan is $11,280.